I'm Nicholas Bornolis of Capital Inc., and I am delighted to welcome you to the panel that deals with Chinese financial leasing solutions for international shipping. As we all know, uh, Chinese leasing solutions have become a major source of financing for global shipping, for the global shipping industry. And we're delighted to have with us a great panel. I will turn it over to Xiuzhi from VedderPrice to guide us through the panel and introduce our panelists. And again, thank you very much for being with us today and making this event and this panel such a great success. Xiuzhi, the floor is yours.
Great, thank you, Nicholas, and thank you for that introduction. Again, my name is Xiuzhi Kim. I'm a shareholder at VedderPrice in the Singapore office. It's my privilege and I'm delighted to moderate this panel. I think we've got a fantastic dialogue and conversation coming up for what is a very appropriate topic to be discussing at the current moment in our sector. And as Nicholas mentioned, that certainly the Chinese leasing companies and the Chinese leasing platform and finance platform have shown substantial growth, as we all know. It's not news. We could think back to the days when, at these conferences, when Chinese leasing would be considered to be an alternative form of financing. But I think the world today is very different the way we view the leasing platforms and the financing opportunities that we have on a global scale that the Chinese leasing companies have provided to the industry. It's mainstream today. And I think that shift in focus and the perception is key, and hopefully we can highlight that during our discussion today. From my observation, we've seen that the leasing companies have become a mainstay partners with the ship owners globally as financing a first resort. You know, they're not the platform that's being provided are not necessarily because ship owners couldn't get financing from the banks or the banks are exiting the industry. They're coming to the leasing companies as partners in the first resort, as sort of as the mainstay part of their financing platforms. And certainly that is we're more than just gap fillers at these days during these times. On that basis, certainly today, the current market, there are many challenges. We see it in the news every day, right? With the pandemic, with the market volatility, the increasing regulations that affect the shipping sector day in and day out. It seems like there's news of some sort, whether it's positive trends or negative trends in the market. It seems like they change every day. And I know that the Chinese leasing companies are right in the middle and thick of things as they do and look at more transactions, the type of transactions that they that are being done today, and their leadership in the industry today on a scale of how many different types of deals that they may be doing, but going forward as the way the market views them as a primary source. So with that sort of baseline, I would like to, it's my privilege to introduce the panelists today to give their perspective, and then we'll go through the sort of the different discussion topics that we've lined up for the audience. First is Mr. Fang Xiuzhi, head of shipping at Bank of Communications. He's right there. Mr. Jack Zhu is the deputy head of shipping at CMB Financial, and Mr. James Chen is the director at Smarine Advisors. Again, this is a fantastic group to share a very different, hopefully a very different perspective of what we've given the sizable and the influential leasing companies that are represented on the panel today, while also sharing a global, perhaps more of a macro perspective from an advisory firm coming from James, who specializes in more the shipping and financing arrangements in our industry. So I think we'll be able to get a very good broad perspective from the panel second. So again, thank you for joining us today, and we'll get started off. What I would like to do is ask each of the panelists to give a very quick introduction of yourselves, as well as sort of your companies, but framed in the perspective of the projects that you've worked on, the projects that are on your site, and sort of the recent trends and highlights that you're seeing in the current market environment. But I think it might be apt to start with James to give a broad perspective, and I believe, James, you have some materials that you can share, and then we can hand it over to Mr. Fang and Jack to give us a very company-specific perspective on some of the market conditions today. James, can I hand it over to you? Yep.
Okay, thank you, G. My name is James Chen. I worked at Smarine Advisors. Smarine is an advisory firm specializing in leasing and financial arrangement in shipping industry. We operate our business from offices in Shanghai, Athens, and Oslo. And basically we help owners to access ship finance, mainly in China. Today, I'm going to share a few studies we have did. Oh, here we go. Okay. As G said, Chinese ship finance has become a mainstream, not alternative sources to the ship finance markets. You can see from these slides, China has become the #1 in terms of the shipping portfolio since 2 years ago. In 2019, China owns $78 billion US dollars. I think this is basically it matches Chinese position in terms of the export, in terms of the shipbuilding and the shipping. If you run a back envelope calculation, you will see Chinese market share in ship finance is between 20 to 25%. This slide shows 53 institutions who are active in ship finance. Among 53 institutions, there are 14 Chinese institutions who are marked with red color. So there are quite a few Chinese institutions on this list. This slide shows the Chinese ship finance market kept a steady growth from 2016 to 2019. The blue color is the drawdown amount from the bank, mainly China Exim. The orange color is the drawdown amount from China Lessors. The gray is the insured amount from Sino-Shore. In 2019, Chinese leasing has a drawdown 15.8 billion, which is a 25% growth from the last year. This is a list for the top 10 China Lessors in terms of drawdown in 2019. The Bocon is the #1, ICBC is #2, CMB is the #3. In the first half of 2020, China Lessors as a whole completed drawdown above 5 billion, which is 1/3 of last year. So I expect the drawdown amount from China Lessors will likely fall in 2020. This slide shows you the shipping portfolio owned by China Lessors. In 2019, China Lessors owned the shipping portfolio 59 billion, which is a 13% growth from the last year. So this slide also confirms leasing has become the mainstream ship finance sources, not only alternative sources. Okay, so this is basically a general picture for China ship finance markets.
That's thank you for that, James. That's very. I think that again highlights the current presence of the Chinese leasing players in the global scale in our market today. But given the current times and the challenging times that we're in, I think one of the things that are being highlighted that we're seeing in the market are that the Chinese lessors are becoming a bit more cautious. It's not about necessarily volume, although what James shared is the volume is there, but given the conditions and challenges, they are being more cautious about lending who and how they lend money to the ship owners amid the current market conditions. But it does seem like there's no necessary plans to get out of the market or anything of that sort. So they are still very active, and you know, you can feel the lessor's presence even in tumultuous times like today. Then let me switch it over to Mr. Fang and Jack. Maybe I can start with Mr. Fang. From a leader within a lessor, you know, your perspective on sort of things that you've seen, deals that you've seen, and partaken in sort of the market conditions today for yourself. Yeah.
Okay. Thank you, Mr. Kim. At the beginning, Captain Link told us that they also prepared for the Chinese track. Yes, means I also can speak in Chinese. In Chinese is okay. Do you mind I speak in Chinese? You know, after so long time, I have not been meet face to face with foreign guests, foreign clients. I don't know how about my English. Well, yeah, if I can speak in Chinese, maybe I can make a better expression. Yeah. So
absolutely, yeah. I don't think that's a problem. No, go ahead.
Okay, so I will talk in Chinese.
Sure.
Okay.
Sure.
Okay.
Thank you so much, Mr. Kim. Now I would like to show our thanks to the Capital Link. Thank you all for organizing this session, this forum for all of us. My name is Fang Xiuzhi. I'm responsible for the leasing business. This year, in face of this epidemic, we have done quite a lot of investment in the first half of this year. An investment reached totally $3 billion. This is able to show our company's opinion and perspective for the whole market. Although the COVID-19 is going to have some impact on the market trend, but we still think that the COVID-19's impact will be lasting for really short term. I do believe that COVID-19 is going to disappear, the market is going to recover. So that's why we're going to pay more attention to the anti-globalization. Especially this year, until now, the fleet asset safety, the client's operation experience, and status quo, I mean, they're all really steady. In general, we are really sure of that. I do believe that in the future, the market, I mean, the Chinese leasing company is going to give priority to the cargo market of China. Thank you so much.
Thank you, Mr. Fang. Jack, from your perspective, perhaps you can.
Thank you, Xiuzhi. Yes, as the slides James just showed us, Shenbi Leasing, I think have already achieved a good result for 2019. But for the first half of this year, we definitely have slowed down the drawdown. Compared to Mr. Fang, we just done very small amount of the new drawdowns. Yeah, as G said, we are a little bit cautious about the epidemic and also the worsening of the US and China relationships and the anti-globalization trends. So, but we do have concluded deals in first half of this year, and which including dry bulk carriers, tankers, containers, and also some gas carriers. So what we have done is just to try to keep our commitment to the industry, to stay with our clients, to go through this tough time. Our shipping portfolio, as the slide shows, we have been standing above $7 billion since last year. But after some several asset transactions, we still maintain the size close to $7 billion. I think from since the outbreak of the epidemic, so we worried about the container shipping sector, very much. But it looks the container segment, it will weather the coronavirus crisis. The even better news is that the crisis has accelerated and solidified a new, more resilient business society for the container segment. So we can see the second quarter of the liners' performance is quite good. So that's released a lot for us. And also for the dry bulk side, it's also gradually picking up, and the tank market has been pretty well. So we continue to do the traditional lease carrier segments. So we will follow Mr. Fang to expand the portfolio in the near future. And also, as Mr. Fang mentioned, so what we are worried about is more about the anti-globalization and also the geopolitical issues. We do think that the epidemic, the COVID-19, will be solved very soon. Thank you, Ji.
Great, thank you for those insights, Jack and Mr. Fang and James as well. I would like to. It's quite interesting because you know there's pockets of opportunity. It seems like despite the challenges, and I'm curious. Are there just as you look at opportunities, despite the current market challenges, as an institution? How do the leasing companies internally? How are you adapting? I mean, what are things that you're specifically perhaps looking for when opportunities do arise, or is it just the assessment? Is it generally the same but just working in a different environment, or is there anything sort of unique or special that you focus on in a challenging market like this that when you see opportunities come up in the sector? Jack, maybe I can start with you there. Yeah.
Yeah. Okay. Yeah. As I just mentioned, I think we are still looking at all of the sectors we have been involved in, from the dry bulk tankers and also the gas carriers, container vessels. But if there's the assets attach a long-term charter with the cargo owners, we will prefer to consider, because we think there's a lot of uncertainty ahead. The trade war, the geopolitical issues, and the uncertainty from the epidemic. So if there's a steady cash flow attached project, this is definitely give us a lot of comfortable. So, and also secondly, we will consider how we refinance the project, how the capital market look at this type of deals and this type of assets. How about the liquidity of the type of assets? So after the COVID-19 outbreak, you know, there was a time everybody worry about the liquidity, worry about the cash. Everybody wanted to try to preserve as much as cash as possible. So that time everybody was panic. So also for us, we just keep trying to talk with our clients. How are your situations? How are your financial situations? How do you refinance for your projects will be matured? So that's very important. The clients can raise money from the capital market, from the banks, from the leasing house. How the deals, all of the investors look at this type of deals. So maintain the highest liquidity is very important for us. So that's very important. How we consider the new deals. And also we do think the most important thing for us is the people. So we always take the characters of our clients as the most important thing for us. So who are the boss of the fleet? Who behind of the fleet? Who are the investors and who manage the fleet, the company? Very important for us. It's the most important factor for us. So if they have a good record, they have encountered a lot of ups and downs. So that means they have prepared for this kind of fluctuation. So even there's a lot of uncertainty coming, they have a lot of reserve of cashes and have a lot of preparing for this kind of uncertainty. So what we do, just stand with our clients to try to maintain very steady growth or maintain just to keep the cash to go through this tough time. So that's very important for us. And for some kind of asset player investors, maybe we can consider some small part of this, but that's not most part of our assets. So that's maybe the appealing from CMB Leasing. I think compared to Mr. Fang bottom leasing, they may be considered sizable deals and very first tier clients. We will follow Mr. Fang, but we also consider smaller size and the Baltic clients as well. Thank you, Ji.
Thank you, Jack. Appreciate that insight, and it's actually quite the insights that you provided on sort of the slight adjustments that you have to that you're looking for your counterparts to make. Certainly, cash in and these days and raising liquidity is certain necessity in survival these days. So appreciate that input. I can turn it over to Mr. Fang. If you could share your thoughts. Jack mentioned you a couple times moments ago. Mr. Fang, if you could add your perspective on sort of the way you're dealing with the challenges and your insight. Yeah.
How to say, to adapt to the current situation. For me, actually, I'm confident. Just as I said at the beginning, we still make too much drawdown this year because we believe the viral COVID-19 as influence will be is short term, not a long term, and the challenge for us is the need from the market is obviously be limited. We can't see too many new building orders like before. The CPS is very hungry, and in the meantime, if we have some second-hand sell and leaseback deal, because the market is poor, the cash flow maybe can't support the project, so it's difficult to find enough the good need from the market or to find the right good projects. So that's the challenge to us actually, but in the same time, we believe that the market, how to say, since there is less rebuilding orders. So the supply will be less than the demand. It's a good thing to the whole market. So the market will be safe. And meantime, the asset price is keep very low. So it's also very safe to our asset management. So we don't think now is really a challenge to us. It's a good, still be a very good time for us to develop our portfolio. So the only challenge is the need is not too enough. But considering the European shipping bank still exit from the market, so we believe we still can find enough good projects at the current moment. But meantime, we must confess the risk control will be more strict than before, because the situation, the challenge to different niche market is also how to say, to some niche market the challenge is bigger than some others. Like Jack mentioned, the liner business is totally after the expectation from us at the in the earlier first maybe second quarter of this year, but the dry bulk market still be how to say, we can't say it's very so stable, or tanker markets also become more and more up and down. So we believe the risk control measure will be more strict than before. Yeah.
Excellent. Yes. There is one thing that I want to come back to later on after I turn it over to James for his thoughts here. That Mr. Fang, you mentioned about the asset play, which I find very interesting in today's market, and the specific place that the Chinese leasing companies have in that sort of interplay between the traditional finance leasings that that we typically associate with the leasing companies, and the gradual shift that we're seeing towards a lot more operating leases, where you're actually becoming, and where your management skills are actually tested, and where you can start differentiating between the teams that have the management wherewithal to go through ownership aspects of our sector. But before we get to that, James, sort of if you could provide your thoughts on perhaps things that Jack and Mr. Fang had stated, but perhaps from a bigger advisory perspective.
Okay.
The challenges, yeah.
Yeah, you know, from our observation on other participants, other lessors, we fear in general the institutions become cautious. You know, basically this is the instinctive response to the uncertainty. You know, they're trying focusing on the stronger balance sheet. You know, they prefer to accept the more liquidity assets. But they also realize that because the QE, the Western banks come back, they have a sufficient fund to provide their existing clients. So Chinese lessors realize the competition, so they will achieve a balance, between how to become competitive and how to manage the risks. So basically, this is a natural response to the uncertainties. That's our observation.
Yeah, and I think that's right. Certainly in any challenging environment, looking at the borrower's cash flow, as Jack mentioned, liquidity is quite key, as well as the balance sheet. Paying more attention to the assets, and I think we were going to touch upon that in a bit. In the particular sector that you find bullish, and where the opportunities lie. So I think the general consensus, perhaps to be said, that the appetite for the sector amongst the Chinese leasing companies isn't dulled in in any means. There are certainly plenty of teams looking for opportunities out there. It just has to make sure that we are able to check all the boxes, and when the opportunities do arise, that rather than retreating, you're actually going forward and being an active participant still in the sector. And I think that's certainly good news for, I think, a lot of ship owners to hear that that there's no necessarily thought of retreatment. It's really more of finding the right opportunities and partners that could work with the leasing the platform. As I mentioned earlier, one thing that I wanted to touch upon that Mr. Fang mentioned was the asset play. I think there was a gradual, we saw a shift in the market where we saw a lot more operating lease opportunities coming up, where the Chinese lessors were not merely acting as another form of what banks typically do in a finance lease market, but or through the finance leasing structure, but more as an operating lessor, where you actually own, have the upside and the downside to the residual risks of the assets, which requires a lot more discipline, a lot more wherewithal with the asset play. But it's interesting in a downturn like this, where perhaps a lot of the shipyards globally may be struggling because of this push towards an operating lessor sort of types of transactions. You know, you're actually at the same time facilitating and helping the shipyards as well, right? Because you are an additional player in that market as well. So if I could just touch very briefly on it, Jack, maybe your thoughts on, I believe, if I'm not mistaken, you guys probably have a bit of a sizable operating lessor, operating lease types of transactions in your books as well. Sort of your general thoughts on that trend. It's a bit unique, yeah.
Thank you, Ji. So we do have operating portfolios. We do place new bidding orders by ourselves directly with shipyards, but that accounts very a small portion of our whole portfolio. So yeah, what are we thinking about the operating leasing? This is a lot about the asset play. So what we are trying to do is to understand how to manage the asset, how to understand the whole industry chain, from the upstream to downstream, and how to negotiate with the charterers to cargo owners to secure a fixed long-term charter to achieve a stable cash flow in the future. So this is maybe what we have done with operating lease. But in the future, maybe we think about, we will follow our friend Mr. Fang, Bockham Leasing, as a leading of the Chinese leasing house. They have done a lot of this kind of directly with cargo owners. Yeah, the first half of this year, they have done a great deal with Shell. It's a very good deal for everybody. So that's the kind of make the market more flat compared to the asset playing model. So we do think this is good, also is efficient for all of the parties along the industry chain. For the cargo owners, they can secure the tonnage for long term, and for the shipyards, they can design the good and high quality vessels for the end users. And also the leasing house can, together with the ship management company, to provide good service to the cargo owners. I think this is a very good organization for the good assets to provide to the industry. This maybe is a kind of a new trend for us to learn to do this. But for us, we still think the traditional ship owners still very important, still play very important role in this industry, because the ship management is kind of require a lot of experience, how to manage the vessels, how to maintain, how to organize the crew, organize people to achieve a good result for the operating. So even for all of the investment of shipping projects, maybe the CapEx is more sensitive compared to the OpEx, but also, OpEx also very important to the decision makers, how this kind of asset is satisfied by the end users. So that is important. That decide the future value of this type of vessels. So in that angle, so we do think also the involved directly with shipyards to negotiate the operating lease structure is also important for this kind of financial investors who like us, the bank background leasing house. So that's also important for us. So we do think this new trend, but so far we still focus on financial leasing as most part of our portfolio. Thank you, G.
Thank you, Jack. Appreciate that input, and I think it is a space that we do have to keep an eye out on. In the last few minutes that we have of this very informative session, Mr. Fang, if I could ask you, sort of, and I think you hinted on it earlier, would you say that, I mean, where is your confidence level for the rest of the year in 2020 in the shipping sector? And perhaps, I know it's hard to envision so far ahead these days, but the rest of 2020 and 2021, perhaps, sort of, how confident do you feel on the way the market is trending in our sector?
Sorry, you mean my opinion to the shipping market?
Future, yes. Just very quickly, a minute or two of sort of your thoughts on where we're trending.
Well, actually, we already seeing the recovery of almost all niche markets. So some market maybe will keep up and down, but it's just as normal. So now the impact of the COVID-19 to the market is maybe only limited to the difficulties in shifting seafarers or something. So I don't see there are big challenge to the market. So personally, I will be very happy to see the full recovery of the market. Yeah.
Excellent.
Yes,
well, I think that's certainly a positive note, and on that basis, I think we're at our time's end. Again, thank you for everyone for your insightful input and feedback on a very important topic that's very apt for today's environment. So I'll turn it back over to Nicholas for.
All I wanted to say is thank you to everybody. This was indeed a very informative panel. And thank you to all of you for being with us today. Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
James.
Thank you.